We are getting a fresh look at the state of the economy today. U.S. gross domestic product increased 4.3% in the third quarter, and this number reflects increases in consumer spending, exports, and government spending that were partly offset by a decrease in investment. It comes as CBS News polling shows a mix of views when it comes to holiday shopping. A majority of Americans say they'll be buying the same or less this holiday season compared to past years. Let's bring in CBS News contributor Javier David. He's also the business editor at the Dallas Morning News. So Javier, this data is from July, August, September. What does it tell you about the state of the economy as we wrap up the year?
Yeah, look, it's a portrait of an economy that hasn't fallen off a cliff when it had all the reasons to do so. Doom and gloom over tariffs. We were talking about recession not too long ago. AI, the robots all coming to take our jobs, but the economy still continues to expand. You have a jobs market that's clearly weakening, and consumers, as your data mentioned, deeply unhappy, real affordability crisis, but the economy continues to expand, and that's because consumer spending comprises about 70% of overall U.S. economic activity. So the data tells us the consumers are still opening their wallets, but they're really not happy about it, and a big part of the reason why is the affordability question.
Robots could still take our jobs, maybe just not completely in 25. They might be coming. As people wrap up their holiday shopping, is there any good news?
Look, the Fed's cutting rates, and that's a good story for consumer borrowing of all kinds. You're talking about mortgages, which are inching lower finally, credit card APRs, which are also at historic highs. They're still in the double digits, but they're going lower. So that's kind of an early Christmas gift for some of these inflation-weary buyers. They've been on the sidelines waiting to buy a new car or a new house, or you're carrying credit card balances and you're paying higher than usual APRs. So all of that means things are moving slowly in the right direction. A little bit of relief as we sort of head into 2026.
I want to ask you about your views on the labor market in 2026, because we know unemployment right now is the highest since 2021. We know a lot of employers aren't necessarily laying people off, but they're also not hiring. What are your predictions for the new year on what we'll see?
Yeah, there's still, we're probably expecting more of the same status quo, maybe a little bit of a thawing. We've had a labor market that's really been kind of frozen solid. But as the Fed continues to do what it does and some of the policy prescriptions that the administration is planning, they're stimulative. And so that means that maybe companies will start to hire. And I'll tell you something, Wall Street and corporate America is very, very bullish on 2026. They really think that the regulatory environment favors more M&A, more investment. So that's a good news story for the economy, and a good news story should be for labor markets.
Javier David, thank you so much.